Ladies and gentlemen, a massive rally is coming in my personal opinion. Let me give you guys the theory in about 2 minutes. Then we'll break down the data behind AMC, the technicals on the S&P 500, as well as AMC. Talk about the data that came out today, the information, the data that we're going to get tomorrow, and how this bounce, this rally could all feed into itself and really become a major event. Now, first things first, take a look at AMC, up 5.5% today. That is very, very good. Even something like Apple is positive today. Snapchat, a lot of my portfolio is actually in the green today, and a lot of my portfolio is long duration. It is, I'm buying stocks now in hopes that these companies will be much larger in the future. That is long duration. That means you're not necessarily getting a good deal when you buy these stocks now, but they will grow into their valuation and surpass that over time, right? Long story short, take a look at the market overview weighted by sector. So the consumer staples are the second worst performing sector of the S&P 500 today. It's worth $2.42 trillion, down 1.61%. The worst performing sector of the day is utilities, down 2.11%, worth over $1 trillion. Now, why is this key? Well, because consumer staples are staple companies, right? This is your Walmarts, your Targets, your stores that people could not live without. Whereas consumer discretionary, yeah, it's down 0.5% today. Not nearly, what consumer staples or utilities are down. And that would be more like your Apples, your consumer discretionaries, places you want to go, but you don't necessarily have to go. Like a Starbucks, that's discretionary, right? Make coffee at home. Starbucks, discretionary. So what I'm getting out of this is that consumer discretionaries have been beaten down to a pulp. Information technology, beaten down to a pulp. Financials have been beaten down to a pulp. Everything has been crushed. Now you're starting to see the two most resilient sectors during 2022 start to see larger declines, right? Utilities, consumer staples, those have been the outperformers of 2022, and now they are not here today, and you're seeing a massive outperformance in stocks like AMC and Snapchat and a lot of your consumer discretionary information technology kind of companies. And you can see information technology is worth $8.55 trillion, down 0.44% today on a day where the S&P 500 is down 0.67%, the Russell 2000 hardly negative, and the Dow Jones Industrial Average down 0.80%. This is kind of like, back in October of 2021, November of 2021, your high growth stocks, your high multiple stocks, the risk on ones, long duration companies, those were the ones taking the massive beating all the way pretty much throughout 2022, and they still are, right? Don't get me wrong, but you're starting to see this change between investors and algos starting to sell off a lot of your more staple companies. So if we get those companies coming down as well, you're going to get the multiple coming down for the S&P. You're going to get a more balanced approach to the markets and possibly see those risk on stocks start to outperform again in a massive way. Now, this was my theory before I even looked at my portfolio today. When I was just combing over the data, going over, market sectors and basically doing everything that I just, presented to you guys. Well, AMC is up 5.5% today. Ape is neutral. Not really, doesn't really have a move today. Apple slightly green, but you could see the massive outperformance in AMC. It's quite remarkable. Now, something else I do want to point out is UUP. If you chart this using Webull or anywhere else, just type in UUP. This is how you track the dollar. Now, the dollar is pegged to global currencies, right? Or I should say global currencies are pegged to the dollar. So who's to say that the British pound or the Chinese yuan is worth more, right? It's because it's pegged to the dollar. So how many wons gives you a dollar? Well, let's just say it's 500. okay, which it's not. A euro is about 1, right? It's almost a 1-to-1 conversion ratio. Well, when the dollar strengthens, when you see this chart going up, it's actually global currencies that are weakening compared to the dollar. The dollar is not directly weakening or strengthening. It is strengthening relative to global currencies. And why is this happening? Well, because there is a lot of fear across the world about a global recession. So people sell off their currencies. They want to buy dollars, and that's why you've been seeing this. And why is that so bad for America? Why is that such a bad thing for the stock market the higher this chart goes? And why does this chart correlate with what we've seen in 2022, right? Look at UUP. Look at this, right? As of September 2021, when the markets were at a peak, we were relatively flat on the dollar. It wasn't really strengthening or weakening in a big way, which weakening can actually be really good to a certain degree for exporters, right? But it was pretty neutral around September. What started to happen after September, in October, in November, January, February, March, April, May, June, July, August, September? Well, this chart has continuously went up. And that, I think, is one of the biggest things that is pushing the stock market down, because if you guys are unfamiliar of how this works with the dollar and exporters, say a company like Apple produces or sells $5 billion, which is more than that, $5 billion of iPhones in China, and takes in Chinese yuans, because people in China, they're not paying you with US dollars over in China. Apple takes in these yuans, right? And then they have to convert that to US dollars. Well, if the dollar's strengthening and they get $5 billion of yuans, right, it's going to convert to a lot less US dollars. Relative, if you had a weak currency, more yuans equaled, you know, more US dollars, that would be good. But right now, more yuans equals less US dollars. So on top of the Fed and fighting inflation, on top of the housing market showing the fastest cool down in basically the history of the S&P Case Home Schiller Price Index, which is 40-50 years old now, it is literally no surprise the stock market is performing the way it is in 2022. And I think the biggest thing is looking at the US dollar. When the US dollar starts to go down, that will spark the major rally in the stock market. But in my personal opinion, that's going to be happening very, very shortly. You can only go up 1% day after day after day for so long with the dollar until the Fed stops raising rates. Because why is the dollar going up at the same time? Well, obviously, like I said, people around the world want US dollars because the dollar is going to be seen as the most stable, right? Strongest military in the world, for all the reasons America is great. That's why you want to own dollars, right? But on top of that, the Fed's saying we're going to pull dollars out of the system. We're going to raise interest rates. We are going to get our money back in our Federal Reserve bank accounts, right? That's because that's what they're doing. Quantitative tightening is taking money out of the system. Raising rates is taking money out of the system. That's another reason you want to own US dollars. And that's another reason why the stock market will continue to go down until the dollar comes down. And we have a lot of Fed speakers this week, so let's bust straight into this action. So for today, there was some Fed speakers, there was some things that were said, some data points. Nothing even made the headlines on CNBC. Nothing was that big of a deal, apparently, to the markets. Now, for tomorrow, you have goods trade balances for August, advanced data. You do have Fed Bostic that speaks at 8:35 a.m. tomorrow. And these Fed speakers, before we ever get a U-turn from Fed Jerome Powell, we will get hints from the Fed speakers, and the markets will take those hints and run with them. So 8:35 in the morning tomorrow, Fed Bostic. 10:10 a.m. you have Fed Bullard. Pending home sales for August does come out at 10 a.m. as well tomorrow, so that will be key. You do have some ECB speakers. Then you have Fed Evans at 2 p.m. tomorrow as well. So 3 Fed speakers, if any one of them starts to talk about pausing rates in one form, capacity, or another, well, that is going to be something that will move the markets. And me personally, you know, if you talk to experts, they're saying the Fed literally has this all wrong, that they should be pausing rates, that they should not let the global, currency market freak out like this, right? Because keep in mind, the only thing that matters is the relative strength of the dollar compared to other currencies. So if the dollar were to, go down, that would mean only that investors are buying global currencies, buying riskier currencies, right? China, I don't think it's too crazy to say that statistically, mathematically, China one day will be a much larger country than America as far as total GDP. So why would you not want to buy the Chinese yuan right now? Why would you not want to? Well, if there's instability, if we're raising rates and doing this tightening in a capacity that China's not, you would want to own the dollar. People start to buy the yuan, they start to buy the yen, they start to buy the sterling, the pound, all these other currencies, the euro. Well, it's going to make the dollar come down. It's going to help out the global markets, because right now this is very unnatural and very unnormal. So there is that. Hope you guys learned a lot out of that currency macro lesson. The whole situation of what is happening is really hidden in the currency chart. Literally, the whole downturn we have seen in the stock market directly, really for the past year now, is correlated with the chart of the dollar. And in my personal opinion, as you are sitting at the lows of 2022 at 360.88, guys, you want to be a net buyer of stocks, damn near sell a kidney to buy as many shares in some of these companies that you want to own over the next 10 to 20 years. This is your time to really make an impact. If you say, hey, I missed the downturn in '08, I missed, the COVID crash, I missed everything else. Well, you have ample time to not miss it this time around, right? I'm not going to say how low the stock market's going to go. Some people say 300. I think it's possible. But you can't time the bottom. Keep some dry powder. That's what I would say. But you definitely want to start buying the dip. That's what any good financial advisor would tell you right now. But keep in mind, I'm not a financial advisor. Contact one if you have any questions about anything that is said. I'm sure they will reaffirm to you everything that is said in this video is the truth. I mean, you definitely want to be a net buyer of stocks right here, right now. Now, let's go ahead and pull up AMC stock. Let's go ahead and do the damn thing, baby. Oh, and I clicked the wrong side of the mouse. An accident. Okay, let's do it. So AMC still up almost 6% at the time of recording this video, heading into the end of the day. Okay, they changed Ortex too. That's pretty interesting. A short score of 80. The short interest value estimate $664 million. Looks like we got some new estimates coming out. Estimated short interest of free float sitting at about 19%. Shares out and loan 180.6 million. Days to cover 4.16. Cost to borrow, it looks like it's up about 7% over the past month. 15.9% currently. The live short interest has us sitting at, like I said, about 19%. The cost to borrow average at 17.5%. The cost to borrow max at 22.65%. And cost to borrow minimum at 14.13%. If we take a look at the option activity for the day, you could see a positive order value of 1%. That's very bad, and it's really skewed because of these large orders. $6.1 million put order for October 21st at the $15 strike, and AMC stock is still up 6% today. I think that shows a lot in and of itself. Maybe it's got to do with that whole FTD situation and potentially some of those being covered, but who knows, something to keep in mind. Now, nonetheless, let's talk about AMC on a technical basis. This is something we want to see, but really, I'm not going to get excited until we break above really $8 per share. The RSI is bouncing off of the 30 level, which is oversold, and the MACD is definitely in bearish territory. As far as the S&P 500, like I said, this is the time to be buying the dip because we are now, let's go ahead and take off VWAP. We are back at the lows of 2022, and we have not closed a trading day at this low of a level in a very long time. So you definitely want to be a net buyer, and you definitely want to be somebody, you know, hopefully that's optimistic for the future after a year of pain that we have been seeing. All in all, technical factors look very, very bearish. The RSI is in severe oversold territory. Last time this happened, guys, was January 26th of 2022, and that's when we did hit the low for 2022, obviously first month of January, and then we did rally about 7% over the subsequent 3-4 days following that, once we did hit oversold on the RSI, and we are now oversold again. So we'll see. Don't know what's going to happen, but nonetheless, the data is looking like it's in our favor. It's the time to be a buyer and hopefully to be excited about equities. So that is it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time, link down below in the description as well. Thank you for watching, and I will see you in the next one.